All righty, good afternoon, everybody. Testing 1 2 3, testing 1 2 3. How are you doing today? Type a 3 in the chat if you can see my screen and hear me. Type a 3 in the chat if you can hear me loud and clear and see my screen, please. We'll go ahead and get started. Just a few moments. All right, let me make a few adjustments. Is that better? Check, check. All right, looks like we are good. We have clearance. We are ready to go. Hope everybody had a good day in the markets. Had a decent little range today, settling rough up just a smidge. I guess it depends on what index you're watching or trading. Dow up, S&P flat, NASDAQ took a little reversal. All right, guys, give me about 30-45 seconds here. I'll be right back. I've got folks still coming in. We're about 1-2 minutes past the half hour here, and we'll go ahead and get started momentarily. All right, gang, welcome to the presentation. You are here to see three-point price action formula to spot any market or to spot market reversals, any market, any time frame. Again, my name is Silas Peters of Seasonal Swing Trader. As I always like to start, I do encourage you to interact, ask questions. I'm not going to stop throughout the presentation and answer all of your questions. I'm not ignoring you. I want to make sure I get through the meat of the presentation, actually teach you a strategy that you can use immediately. And the reason that you're registered to come see this is to learn a high probability strategy that you can use immediately for any market, any time frame. I'll prove it to you. We'll talk about what happened in today's market environment with what I'm going to show you. We'll take a look at symbols, and I will answer all of your questions at the end. So let's go ahead and get started here. Before we begin, we must always start with the risk disclaimer as required by the regulatory governing bodies and our attorneys who require us to share. Past performance is not necessarily indicative of future results. There's substantial risk of loss associated with trading. Only risk capital should be used to trade. You can't lose money in trading. So what this means is, Cliff Notes version, don't trade with your milk money, your mortgage money, your rent money, your child's educational funds, ice cream money, so on and so forth. You can lose money in trading. Trading is risky. Want a copy of that? Email me. I'll be happy to send it to you. Now, let me introduce myself once again. My name is Silas Peters. I'm a husband, father, son. These are me with my two beautiful daughters here in front of my alma mater at the University of Alabama. Other pictures of myself hanging out with my girls and my wife. I would like hanging out at the beach, getting out on the water. I like playing golf most of the time. Just to show you that I am a real human being, not a robot. And 3 days after I graduated UA, I moved to the Windy City 3 days after graduation. That's where I sold my car, packed up my belongings, and I headed north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets, working at the Chicago Board of Trade. And it's here where I was bitten by the trading bug and never really looked back. So while there, I helped run a global trading desk, placing, managing books of trades across the Americas, Asian, European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large four spec traders, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading back office, sales, and support. And then in 2016, I launched Seasonal Swing Trader. And then also here in 2020, or last year in 2020, we launched our advisory firm, Blue Marlin Advisors. So that's a little bit about me and myself and my family. But let's talk about my journey. It wasn't always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that was the case, but ignorance and greed cost me my profits. I blew up an account, then I blew up a few others in what I like to call revenge trading. Finally settled down, went back to my roots, worked my process, and found overall consistency. But enough about me, let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I hope not. This is not my desk. This is a bad joke. I found this on the internet because I thought it was funny at the time. I feel like it's the perception of what those on the outside looking in think this is what trading is or what we do. We're sitting down in a basement surrounded by a dozen monitors. Now, my desk did look like this in Chicago for obvious reasons, but I've since pared down to a handful of monitors for quotes, charts, order entry platforms, email, and day-to-day, website for operations. But this is certainly not necessary. You do not need all this to trade. All this really is just unhealthy on your eyeballs. You do not need all this, and I will show you. And all this really does is leads to paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my digital hand here. I never done that, got the t-shirt per Wikipedia. It's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis they think they could possibly do? They, dotted the I's, crossed the T's, they're ready to put their finger on the mouse, pull the trigger, and then, this line cross that line, or something comes up thus negating our overall decision. It happens all the time. It's part of trading, but I'll show you ways that you can help eliminate. And analysis paralysis is no good. And unfortunately, a lot of people, beginning traders especially, even experienced or mildly experienced traders, experience this. But I will show you that trading, as we know, is not easy, but it can certainly be simplified. So I appreciate everybody's interaction so far. Let me know what you trade. I like to see what kind of crowd I'm talking to here. You trade stocks, options, ETFs, futures, Forex, maybe even cryptocurrency. Of course, cryptocurrency being super hot right now. I trade all these actively, stocks, options, futures, and Forex. I don't trade crypto actively. I do quote unquote invest in crypto. I do have, various baskets of cryptos and of course Bitcoin, things like that, in different wallets and exchanges across the World Wide Web. I'll be lucky if I am ever to get back into those things and remembering all the passwords and encryption codes. But I do trade stocks, options, futures, and Forex on an active basis. So let's see, we've got options, ETFs, stocks, futures, options only, futures and stocks, selling options. Nice. I like credit spreads as well. Appreciate that because, and I'm glad to see I really literally have a mix of all that, because what I'm going to share with you today works on all those markets and asset classes. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. And most importantly, it's simple. We're not here to teach rocket surgery today. We keep things bare bones simple, and I'm going to prove it to you with numerous examples. So my agenda and promise to you today is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So I'm going to stop and ask you some point during the presentation, have I fulfilled my promise? And I hope to see a lot of yeses. If the answer is no or unknown, please let me know and let me know how I can help simplify what I'm about to show you. So speaking of the $10,000 trade promise or promises, unfortunately, I'm not going to promise you anything. I cannot promise you anything legally or ethically in trading or in life, because we don't know what the market or life is going to give us. But these were trade setups that we talked about in multiple free presentations, such as this one about some $10,000 setups that we saw in crude oil futures, RBOB and lead gas, as well as a third one in nat gas. We talked about a very simple mechanical setup, one that you're about to learn here in a few moments. that went on and achieved a $10,000 trade objective and then some. We also talked about supermarkets here in coffee and OJ. See here from a 5, 15, and 30-year historical price perspective that markets tended to bottom out or get quiet at this time of the year. Does that mean that we went and bought these markets? We went and bought call options, call spreads, sold bull put spreads? No, we said wait patiently for this setup that could likely occur, the one that you're about to learn here momentarily to set up, and that's exactly what happened. They went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about trades in corn, soybeans, and wheat. This is corn on the left, beans on the right. You see here from a 5, 15, and 30-year historical price perspective, the markets tended to get quiet or bottom out at this time of the year. It's exactly what they were doing. We had favorable weather out in the Midwest. Does that mean that we went and got long these markets? No. We said sit on your hands, wait patiently for this very precise setup, one that I'm about to teach you to set up, and that's exactly what happened. They went on and met their $5,000, $6,000, and $7,000 per contract price objective, and it happened over and over and over again. Here are some recent trades in the S&P here. 750 points in the E-mini S&P. Here's 160 points in cocoa, 300 pips in the Aussie Kiwi, and two $20 trades or $40 total there in Facebook. So who here wants to see this very precise mechanical setup? All right, drum roll, please. Of course you do. Otherwise, you probably wouldn't be here. It is the 1, 2, 3 pattern. Who here is familiar with the 1, 2, 3 top or 1, 2, 3 bottom pattern? Who here is familiar? I would suspect that 99.8% of you are. Seeing a lot of yeses. This is one of the most fundamental technical patterns in the textbooks, Technical Analysis 101. I didn't invent it, but it is highly, and I mean highly, overlooked by most traders. And every one of you, which so far have said yes, you are, you're going to go, oh my gosh, you're going to beat your head and say, why am I not using this in my trading? So let's talk about it real quick, and then we're going to go into several chart examples. So the setup is price action based. The pattern is comprised of a low, higher high, and a higher low, and a break at the higher high in the case that we're going long. Inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. I will stress it works extremely well when the pattern sets up at significant areas of support and resistance or other high probability technical patterns such as head, shoulders, tops and bottoms, double bottoms, and so forth. Let's talk about the mechanics here. Doesn't matter what this is. This could be Pepsi. This could be Potcoin. This could be Merck. It could be Best Buy. It doesn't really matter what this is. We're learning the very basic mechanics and principles here. So point 1 becomes the highest peak when price finds resistance, it then starts to move back down. Once we stop making these higher lows and pull up, we get our number 2. Once we stop making these lower highs and pull back, we get our number 3. 1, 2, 3. 1, 2, 3 top traders know that we're looking to get short on breaks or closes below the number 2, which you can see precisely what happened there on that next bar. 1, 2, 3 bottom, same rules apply, but only in inverse. Point 1 is formed when we find that lowest support level, i.e. we stop making the new lows and pull up, we get an established number 1. Market trades higher, trades higher, trades higher. Once we get that pullback, when we stop making these lower highs, we get our established number 2 points. We have a 1, 2. Market trades lower. Once we stop making these higher lows and pull back, we get our number 3. 1, 2, 3. 1, 2, 3 bottom traders know that we're looking to get long on breaks or closes above the number 2. We don't know what happened in this particular example, but that's where we would be looking to get long. Okay. Now let's talk about some charts. This is a daily chart of the 6A or the Aussie dollar futures. If you don't trade futures, you could look at FXA, the ETF that tracks the Aussie. Forex traders could look at the Aussie US pair in Forex. All right, so I mentioned this is a daily chart. When we're looking for a day, when we're looking at a daily chart, we're primarily focused on looking for 52-week highs or 52-week lows. That is not an absolute rule, nothing set in stone. We'll talk about ways later that you can dial that in to find more opportunities, say every 6 months, every 90 days, to find more or less opportunities. These example purposes, we're going to focus on 52-week highs or 52-week lows. So here we have a 52-week high. This is indicated by the number 1 point. This number 1, why? Because it's a 52-week high. So it gives us our new counting point, our number 1. Market trades lower, 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 pulls up. Once we pull up, we get an established number 2. Now you'll notice we've only retraced up by about 4 or 5 bars and then pulled down. We give us a 1, 2, 3. Now the market could have traded up here, or even up here. As long as we don't take out that number 1 high, we have a valid 1, 2, 3 top. Okay, we have a 1, 2, 3. Now we're looking to get short on breaks or closes below the number 2, which is exactly what we get. What about the other important ingredients of the recipe? Where's our risk? Where's our profit targets? Well, very simply, the initial risk is above the high of the number 1 point. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So we measure from here to here and then down. And that's about 225 ticks or $2,200 per contract in this example. So yes, you'll know or notice that it's a 1-to-1 risk-reward ratio right off the get-go. If our risk is up here, our target's the distance between the 1 and the 2. It's a 1-to-1 risk-reward ratio. We're okay with that. We'll talk again about ways later how you can quickly cut that risk by a substantial amount, but it's very important to let the market move in its anticipated direction. So we know that anticipated direction is to the downside, and once the market starts breaking down, taking out lows, we can move our stop. So initial risk is here. Where's the next logical area to place our risk? Above the next area of resistance, which is above the number 3 high. All right, so we cut it from here down to here as we start making new lows. So we've quickly cut our risk down by 60 or 70% in this particular example. Let's look at another one. 1, 2, 3 top in Walmart daily chart. We have a number 1. Why? Because it's a 52-week high. We have a 1, 2, 3. Again, we know already in advance what other traders are struggling with. Well, I see a potential topping action, but where do I get in? Where do I place my risk? Where do I place my target? We know this days in advance. We know that with the 1, 2, 3 top pattern, we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the number 1 high. We know our initial target is the distance between the 1 and the low of the 2 measured down, which is about $5 in this example, okay? Let's look at 1, 2, 3 bottom examples. It's a 15-minute chart of the E-mini S&P. So we're a little bit different scenario here. On a 15-minute chart or any intraday chart, whether it's 1 minute, 5 minute, 10 minute, etc., it doesn't make sense to go for a 52-week high or 52-week low. So on an intraday chart, we're looking for session highs or session lows. How do I define a session low or session high? Well, I'm going back to the Globex Open. So for those of you that are not familiar with futures and Forex, they trade darn near 24/6. Virtually around the clock. And so wherever you start your trading day, they open up at 4 or 5 o'clock on Sunday afternoons, trading into the Asian session, trading into the European session, trading into the New York session, closing down for about an hour at the end of the day, reopening, rinse and repeat through Friday. So wherever you start your trading day, you're looking for new highs or new lows. So I start my trading day around 6 a.m. Central. If you trade the 2 or 3 a.m. European session, the Asian session, maybe the 9:30 Eastern New York cash open, maybe the last hour of the day, you're looking for new highs or new lows. So that's exactly what we get. We start getting new lows here. That's why we have the red number 1 point here. And then we move up, and we move down. We give us a 1, 2, 3. So aggressive traders talk about entry. A couple of different entry methods to consider. Aggressive traders would work a buy stop a tick or two above the number 2 high here, and boom, you're triggered into the trade. A couple of alternative entry methods that I prefer are either to A, wait for the market to come back down and retest the number 2 breakout area. You see we bump up, we come back and retest, or wait for the market to come and hook back above the number 2 breakout. So let me talk about this. So here the market trades up, rolls back over, and then hooks back up above the number 2, getting you in on that second leg up, okay? So utilizing that entry method, one of two things are likely going to happen. One, you're going to miss out on some trades. Sometimes the market trades up and bust up through the number 2 resistance area, and boom, goes off the target levels, leaves you at the train station. There's no reason to get your feelings hurt because there's plenty of opportunities. But what is it also going to likely do? Sometimes we'll bump up, roll back down, but sometimes we'll keep going and roll down and stop you out. So utilizing that second kind of hook method, it keeps us out of potential false entries, okay? Let's look at another 1, 2, 3 bottom. This is a weekly chart of Apple. Hell of a way to catch some longer term position type moves. Here we have a 1, 2, 3 bottom on a weekly chart. We also have a double bottom, another high probability pattern. You see that we break out above the number 2 high here of this large bullish candle. We trade sideways for a few weeks. Market comes back down and retests and or hooks back above. That's our confirmation to get long. How? We can buy Apple stock. We can buy call options. We can buy call debit spreads. We can sell bull put spreads if we're credit spread sellers. We like to trade credit spreads, okay? It's whatever your flavor of trading or style is. Now, I hate to bust everybody's bubble. They don't all work. This is no holy grail. There's no holy grail in trading or in life. That's just part of living, okay? This is a good looking chart. I probably took it in my live account. 5-minute chart of the E-mini S&P, 1, 2, 3. We have a trend line break. We got, very vertical here, 1, 2, 3. Again, those aggressive traders may look to be getting short here on the break below the number 2, or if you wait for that alternative hook method, market trades up, rolls back down, you're in this one. Now, maybe you're up by 1 or 2 points here. I'm not real sure what the calculation is. If you sat on your hands and didn't do anything, you're stopped out above the number 1 high, or if you manage your risk as we start making new swing lows, you move your risk down to above the high of number 3, cutting your risk in half, okay? But look, what else do we get? We get a new number 1 point. This high is greater than that high. We get a new 1, 2, 3 top pattern, and that ends up being a profitable trade. Now, I also like to talk about the no trigger trade. And this is neither good, bad, nor ugly. It is what it is. It's a no trigger or avoided trade. And let me tell you why I like these when this happens. So here we have a couple setups. 1, 2, 3, looking to get long. Market size to roll over, taking out this number 1 low. We start to count over. 1, 2, 3, looking to get long above the number 2. Market rolls over, takes out the number 1 low. We start to count over. 1, 2, 3. Finally, are able to get long this last attempt. So can anybody tell me why I like this? Or let me rephrase that. Can anybody tell me what is likely happening in this situation? And then I'll tell you, or you can tell me why I like it. We're having, yeah, there's a good answer, is flushing out, stop hunting, continuation, there's no wrong answer there. But what's likely happening is divergence. We're likely having some divergence. So that simply means that as price is making new lows, whatever divergence or momentum oscillator we might use, stochastics, RSI, MACD, so forth, we are likely going higher or not, i.e. not making higher lows, thus giving us our price divergence, okay? We also have a nice little trend line break as well. It's all about trading with confluence. Let's talk about pattern management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies. If you're only trading one contract in the beginning, I would say strive to go for the distance between the 1 and 2 points. Uncanny how more often than not, it will go tag that target almost to a tick and then reverse. Now, if you're trading multiple contracts, there's futures, options, FX pairs, shares, whatever, Then you say, hey, I'd say, hey, take a third, half, 2/3 off at the distance between the and 1 and 2 initial target. And then you manage your balance of your position using any way that you manage your trades. I mean, I can't answer that for you. We're all different. I like to target good old-fashioned structure, support resistance levels. You can use trend line analysis, moving averages, PAR/SAR, fib numbers. It all depends on you as an individual, okay? All right, so I've showed you that the setup works in any market, whether you trade pips and Forex, Pepsi stock, potash, pot stocks, pork bellies, or the Polish zloty, and on any time frame, whether you trade tick, 5-minute, hourly, 4-hour, daily, and more, and on any trading style. Are you a position trader, scalper, swing trader, tick trader? Type in, let me know what type of trading style everybody is. I like to, just kind of keep this discussion going. I like to see what type of traders everybody is. So we got scalpers, we got position traders, we got swing traders, we got all of the above. We got a lot of swing traders, intraday, tick, pins, weekly options. That's very cool. Yeah. And the point of this, and I always ask this, is that you've got to determine what your bread and butter is. I like the 5 and 10 minute, occasionally getting into the tick charts, the hourly and 4-hour on some commodities and currencies, the daily for everything, whether it's commodities, FX, stocks. So we'll do equity options on the daily and weekly. But the point is that you've got to figure out what works for you. If you're working a 9 to 5, you're probably not able to scalp on a tick chart. Maybe you're retired and you're out, enjoying life, and you don't need to be cooped up, sitting there scalping with a dozen monitors on a 1 minute or tick chart. The daily, weekly, 4-hour should be plenty, but it depends on what your style is and what you're willing to commit. All right, but these are the time frames that I like, and some days I can't commit to the lower time frames, but I try to make it a habit to always look at my charts there at the end of the day. Okay, so you've seen the proof. Let's look at some real trade examples. Not to say what we just viewed were fake, but let's look at some real trade examples that we utilize in some of our services. First one here is a daily chart of crude oil. Daily chart of crude oil, and we have a number 1 point. Why? Because it's a 52-week high. 52-week high. I'm going to go through these examples on the chart. You can follow along with this text on the right, but I'm going to talk about this chart. So we have a 52-week high, gives us our new number 1 point. Then we have a 1, 2, 3. It's a smaller 1, 2, 3, smaller 1, 2, 3, but it is very valid. And we know in advance, again, where our entry is, where our risk is, and where our targets are, right? Our risk is above our entry is a break or close below the number 2. Our risk is above the number 1 high. Our targets are the distance between the high of the 1 measured to the low of the 2 measured down. And we see we broke down, we come back, got a small retest, met our $3,000 or $3 contract price objective. Then we go into consolidation or sideways mode. I get asked, does this strategy work in consolidation or ranging markets? Well, the answer is yes, because we're theoretically looking for new highs or new lows, but those that want to be more aggressive or more trade opportunities can trade range bound 1, 2, 3s all day long. We have a potential 1, 2, 3 right here. Move to the upside, ends up being a nice move. But I'm looking for new highs and new lows, and we get that here. This high is greater than that high, giving us a new number 1 point. 1, 2, 3. We also have a trend line break. And let me mention that this time of the year got my mouth watering. Why? Well, because of the high probability pattern we have in the 1, 2, 3 top that we've been discussing. Secondly, we are now at a time of the year from a seasonal perspective where crude oil and energy markets in general tend to trade to the downside. Okay, so when we have those two things aligned, you know, that's called the perfect alignment or the perfect marriage in trading. High probability technical pattern with high probability seasonal analysis. So here we have a 1, 2, 3. We broke below the number 2. We had 3 or 4 days of retest, giving you ample amount of time to get in. And we did. How? Well, we got short. We sold crude futures. We sold bear call spreads. We bought puts, put options, trade USO, other leverage ETFs. Quickly met our $4, $4,000 per contract price objective. Then we ended up moving down and moving down hard. In fact, this move traded down over $20,000 per contract. We didn't catch that entire move, but we caught a large chunk of it, all by trailing our stops until we either got a reversal or we were stopped out. We have a potential 1, 2, 3 bottom here, potential 1, 2, 3 bottom here. Now look at this, 1, 2, 3. Very good looking pattern. Also have a beautiful triangle pattern. Second, probably my second favorite pattern. They just don't appear as often. And now we're at a time of the year from a seasonal perspective where energy markets tend to trade to the upside. So I was about ready to get long and get long aggressively right here. But what happens? The market decided it wanted to sell off. It never took out the number 2 high, but in fact took out the number 1 low and sold off another $10 or $10 per barrel. And we finally got another flush down low right here, giving us a new 1, 2, 3 bottom with the $5 or $5,000 per contract price objective. Let's look at another market that everybody's familiar with, and that's gold. This is actually GLD, the ETF that tracks gold. I prefer to look at the futures chart first. It's going to be a lot cleaner, a lot more fluid. You're not going to see all the gaps because they're trading around the clock. But if you want to look at the ETF, that's perfectly fine. So here we have 3 examples in GLD. 1, 2, 3. Market breaks down below the number 2, gives us a couple of retests. We can sell gold. We can buy put options, sell bear call spreads, reaches our $4 profit objective. We finally get a new low here, 1, 2, 3, also double bottom. Market trades above the number 2 high. We can buy gold, buy GLD, buy futures options, sell bull put spreads, reach our $2 profit objective. Then we go sideways, kind of like that crude oil example. People say, well, you missed this huge move up, or you missed this huge move down. Maybe I did, maybe I didn't. I'm only looking for new highs or new lows, but if you want to trade this 1, 2, 3 boom, or this 1, 2, 3 top boom inside the range, you by all means help yourself. Best of luck. There's some nice moves there. I'm patient. I'm watching many markets. So we start getting new lows. These lows are lower than these, so we're starting to get new number 1 points. New ones, new ones. This looks like a number 1, 2, 3. 1, 2, 3. But what happens 2 days later? We gap down. This low takes out that low. No worries. We start the count over. 1, 2, 3. Here we go. This time the market gaps higher 2 days in a row. Boom, boom. Comes back and retests. Gives us a trend line retest as well. That's our confirmation to get long gold. We can buy gold futures, gold call options, gold call spreads, sell bull put spreads, whether it's GLD, gold commodity options, or other gold or metals leveraged ETFs. Let's look at another example here in Delta. It's probably becoming redundant by now. Just trying to show you some examples. Here we have some moves, 1, 2, 3, gaps higher, come back and retest, trades the upside. 1, 2, 3 top. This one gaps down, never comes back. I don't trade these gaps. I've got members and students that will trade these aggressively, so they're selling stock, buying puts, so forth. Here we get another another opportunity. 1, 2, 3. This one trades sharply below the number 2 low. Gives you a small retest here to hop on board. Trades $8 plus down, and we get a new one. 1, 2, 3. Trades above, trades higher, pulls back, and then hooks back up for an $8 plus move. All right, for the Forex traders out there, for our chart of the CAD Swissy, here we have a 1, 2, 3. Again, those aggressive traders may be taking the initial breakout here above the number 2 high. boom, you're into the trade. Or if you wait for that retest and or that hook back above, you reach your 70 pip profit objective. Now, all we do is we're waiting for a new high. New highs for a 1, 2, 3 top, okay? 1, 2, nope. 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 Finally get a 1, 2, 3 here. Smaller one, breaks down below, gives you a retest, and gives you a quick 40 pip profit. Now, what about intraday trades? Of course, they work on intraday trades. It's a 5-minute chart of the NASDAQ. Here we have a 1, 2, 3. Market breaks above and hooks back above, gives us our 13 points. Here we have a 1, 2, 3 top, breaks down below the number 2 here, then goes sideways, gives us a little heartburn, finally breaks down, giving us our 20-point profit objective. Now we get looks like one last hard sell, the probably last hour of the day. Here's our final low, 1, 2, 3. Market breaks above the number 2 here. If you're lucky enough to get long, filled on that retest here by a tick or two, you're filled on your 30-point profit objective in about 2 or 3 bars. So, and this is perfect for, if you're worried about risk, the moves of these indices, which can get a little hairy. There's the micros, and if you're comfortable trading multiple contracts, these give you that ability. Trade the micros to scale in and out. You can trade the micros to carry positions overnight without losing too much sleep. All right, so why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. So this is where I ask you, have I fulfilled my promise? Have I fulfilled my promise up to this point? And please answer honestly. And if I haven't, you've at least got to tell me why, so I understand how I can make this, I'll break this down even easier. So a lot of yeses, absolutely. No no's so far, and that's good. So let's keep tracking. But wait, there's more. There's more. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a pending setup? Well, I don't know about you. I would think that would be quite amazing. So does everybody remember the charts that we just looked at? Crude, gold, NASDAQ. Does everybody remember those? Let's look back at that crude example. This is the exact same crude oil chart we just looked at a few moments ago. If you don't remember, that's fine. Let me refresh your memory. Let's talk about this. But now, wait, there's a few other things going on here. We got arrows and lines and colors. Looks like a bag of Skittles. So let's talk about it. Well, these green arrows are your number 1 point. Your red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. Pretty simple. Now, what about these white stealth signals or chevrons? This is not a sell signal. This is not a buy signal. These are little arrows giving us a visual aid that's saying, hey, we've broken below the number 2, or we've broken above the number 2. Just giving you an alert that indicates that we may want to get long or get short, or at least look at the chart. So if and only if we break below the number 2, or if and only if we break above the number 2 high, we get the chevron or these arrow prints. And if and only when that happens, we'll get these 4 lines plotted onto our chart. What are the lines? Well, the blue line can be considered your entry or breakout level. Your red line is your stop or risk level. Your lime green line is TP1, and the dark green line is TP2, or take profit 2. What is that again, or how are those measured? Remember, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down. And TP2 is simply 2 times the distance of TP1, okay? Let's look at the gold example. Actually, let me go back to crude. What about all these green arrows? Why in the heck do we see all these green arrows? Great question. These are just indicating and showing us that we're making new lows, so we're starting new counts. New lows, new lows, new lows, new lows. Once we stop making new lows and pull up, we stop printing green arrows. We get a 1, 2, 3. We never break above the number 2 here. In fact, we make a new low, so we start new green arrows. 1, 2, 3. Looking to get long here. This is that one I was telling you I was about to get long aggressively, but the market sold off, taking out these lows on this bar. So we get no chevron and no lines. Okay, that's why we don't get any setup. Here's that gold example. 1, 2, 3. Market just takes out the number 2 high. So if it does, we get our print. We get our print. TP1, TP2. Remember, we're not getting any signals here because our settings are looking for new highs or new lows. Here we're clearly trying to make a bottom down here. 1, 2, 3. Here's that bar that took out that low. 1, 2, 3. Just took out the number 2 high again, so we get a print. Entry level, risk level, TP1, TP2. You can see we're looking for a new 1, 2, 3 top over there. Delta Airlines, there's your long, there's your short, there's your long, there's your short, and then your long. And then the 5-minute NASDAQ, 1, 2, 3, market breaks below, hugs that breakout area for several bars, hits TP1, hits TP2 to the tick. Notice that TP2 happens to be a new session low, so we start a new number 1 count. 1, 2, 3, market breaks above, comes down, hooks back up, gives TP1, doesn't quite hit TP2, good enough, close enough for government work now that we're in tax season. Then we go sideways, comes down, these lows are lower than these lows, start to count over. 1, 2, 3, notice that this just peaks its little head, taking out the highs of the number 2. 1, 2, 3, comes down, trades back up, goes down, hooks back up, TP1. Notice that while we're waiting for TP2, we're starting to get new session highs or these new number 1 points. This indicates that we may need to get ready to reverse our position and go short. But we do end up hitting TP2, and we finally do get a final 1, 2, 3 top. We break below, trade up, and then we hook back down, hitting TP1 and TP2. So is this training for you? Only you and you only can answer that. If you're new to the markets and want to just jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, paralysis analysis, if you want to simplify what you're doing, maybe you're already a successful trader and want to add another high probability strategy, or if you want a very specific step-by-step mechanical plan that you can do even part-time, then this training could be for you. And I'd like to tell a quick story here is that when I had this built out, I brought my wife down to my office, who was a ballet teacher, and I brought my 2 girls down who were like 4 and 5 at the time. None of them know a flying flip about the markets. They don't even know what I do. And I showed them what I was trying to accomplish with what I just showed you, and this very simple 3-pronged strategy. And of course, after looking at the quotes and the charts and going, wow, look at the colors, dad, and all that, they finally got it. They finally understood the concept. And so my point of all of this is that if they can understand it, then you certainly can too. And that's no joke. All right. So I do have a very special offer for today's workshop attendees. You're going to get the 3S code high-low indicator and scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get the chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Don't worry, I'm going to explain and show all of this to you. So what the heck is a 3S code high-low indicator scanner? Well, it's exactly what we just went over. This is the 3S code indicator on a chart of Thinkorswim. You see our shorts, and our longs. Here's a daily chart of Bank of America. Long, long, long. Daily chart of Love, LUV, Southwest. Here's a short hitting TP1 to the tick. Here's a short, whoops, bad trade, that's a loser. We get another chance to get short up here. All very nice, easy, clean swing setups. Now, why do all the work when you can let technology do the work for you? So I use Thinkorswim as my primary platform. You can see where I'm scanning for 1, 2, 3 tops and the Russell 1000. Only stocks that are optionable, $20 a share or greater. I hit the green scan button and voila. What would take literally, I mean, I don't know, days, if not weeks, if not months to scour through all the symbols can be done in a matter of seconds. This is a screenshot of watch list I have in Thinkorswim running on one monitor. I have a monitor dedicated to watch list where I'm scanning across multiple markets and multiple time frames all at the same time. Now we've been looking at TOS. This is what it looks like on TradeStation. Here's your 1, 2, 3 indicator. Here's your scanner. Here's what it looks like on NinjaTrader 8. Here's your 1, 2, 3 indicator. Here's your scanner. Here's what it looks like on TradingView. 4-hour chart of Apple. You can see the long and the long with the levels plotted. And a 4-hour chart of the Euro Kiwi on MetaTrader 4. There's your long, there's your short, and a potential long with a couple of moving average layovers. Now, full disclaimer, there is no scanner on TradingView or MT4. You're only going to get this scanner. You get the indicator for all 5 platforms, but you only get the scanner for TS, TOS, and NT8. There's no scanner that is available for TradingView or MT4 at this time, okay? Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process. Letting the platforms scan the markets for me, locating the setup. I go to my platform for entry, and then I manage to trade through the exit. And you can start doing so today with the 3S code. So here's a special offer. You get 3S code high-low indicator scanner for Thinkorswim, TradeStation, and NT8, TradingView, and MT4. Chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we recently offered this online, no joke, at these prices, $19.97, $14.97, and $9.97. But for the first 25 spots today on this live workshop, we're pleased to offer this for a one-time fee of $397. The offer link is seasonalswingtrader.com/code. I'm going to answer everybody's questions, and we're going to look at even more examples. Let me pop that into the chat for you. seasonalswingtrader.com/code. Let's talk about what the indicator and scanner includes. Again, you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas as we've been showing you, that has the entry, exit, stop levels, target levels, customizable settings. If you don't like red, you want hot magenta. If you don't like dark green, you want puke green. You can change the arrows to dots, dots to squares, squares to hashes. You can scan for setups only or trigger only. That means that you can scan for setups, meaning those that are in the process of setting up, or those that have actually triggered, meaning they've actually broken above the number 2 or broken below the number 2. You can scan for tops, bottoms, or both at the same time, as well as swing trade setups or intraday setups at the same time. Also, this multiple look back period, you have the ability to adjust that. Remember, by expanding that variable, and it's all explained in the members area, by manipulating that variable, that's going to dictate whether you get more or less setups, okay? Bonus 1, chart pattern principle trading manual. It's a 90+ page PDF showing you how to read charts, how to identify different markets. There's additional strategies on volatility, other high probability chart patterns, seasonal trends, and much, much more. Bonus 2 is my 25 top option strategy guide, literally strategies for all account sizes and types, whether you're just learning to trade basic calls and puts to more intermediate advanced, such as condors, verticals, butterflies, diagonals, more. And then bonus 3 is access to our private Discord channel. This is not a chat room, but it's a real-time hub that operates 24/7 for people to come in, post ideas, thoughts, charts, questions. Hey, this is working. This is not working. Ask questions. What do you think about this market? What do you think about that market? Look, there's thousands of markets. There's dozens of time frames. Not a single human can manage or monitor all that. So it's a central hub where everybody can come in and help themselves. And these are some unsolicited testimonials that are received. I don't ask for them. They come in all the time, very pleased and humbled, all by people taking action with the 3S code. Okay, are you ready? Are you ready is what I have to ask, because this is an example of one of our water services where we use 3S code for that particular signal. $7,800 on crude, $5,800 on unlead, $1,800 on pound, $1,400 on euro, $3,600 on nat gas. Okay, these trade setups happen over and over again. I do eat what I cook. These are snapshots of my platform here at Thinkorswim, as well as my futures platform. So I do most of my equity options trading in Thinkorswim, and my futures and futures options trading. So I got crude options, cotton options, copper options, yen options, nat gas options, the S&P over my futures account. And then finally, before we get to the questions and examples from today's action and your symbols, this is just a quick, again, just a quick snapshot here of very easy to read setups here. The S&P, this is a 233 tick chart. Short, short, long, long. They happen over and over again. So here's the special offer once again, seasonalswingtrader.com/code. Let me take a swig of water here. I'm gonna scroll up to all the questions, and then we're gonna take a look at some charts from today. Okay, Brian, are you having trouble hearing me? See you're typing hello with the question mark. Hopefully the sound is still good. I've got a ton of questions, so bear with me for just a second. I'm going to scroll up to the top. I told you that I did want to go through the actual presentation, teach you the strategy, and then I would get to all the questions, and we'll take a look at today's setups. I hope that sounds good, because we had some really nice setups. You can see it in action. Yes, we did record, James. I think I answered that already. This is not just for trading options as opposed to stocks. It works for all markets, as we explained, or hopefully we got that point through. And then it's not plotting options. It's plotting, stocks, equities, ETFs, commodities, FX. And what I do is use those setups to go and trade options. I primarily focus on credit spreads that you can, buy calls, buy puts, trade debit spreads, so on and so forth. What's the best time frame to do this? It all depends. I can't say one time frame is better than the other. All the markets are constantly moving. All the different asset classes are moving one way or the other. It depends on, are we getting volatility? Are we stuck range bound? Depending on what environment we're in, that's going to dictate how many opportunities you have, either more or less. If you find yourself not getting as many opportunities that you desire, but then you can flip down to the lower time frame. We'll take a look all the way down to tick charts here in a moment, and we'll take a look at the daily charts. So there's no time frame that's better or worse. It all depends on your situation, how much time you can commit. Can everybody see this? Can everybody see this chart before we start looking at some examples here from today? What time frame of chart am I looking at? This is a 10-minute. This is a 10-minute. Through the examples, I showed various time frames from 5-minute to 15-minute to daily. I'm talking mainly futures and forex. What about options? Again, we'll take a look at a bunch of stocks. I thought that we covered a lot of different markets. We talked about GLD, we talked about Delta, we looked at Bank of America, Love, and we'll look at some other equities if you feel like that was too futures focused. Is there a way you could write next to color line buy or sell? Not really, but you can. Let me see if I can pull up a chart. So what you have an option to do is put labels on your chart. So you can add these labels here. So it's going to show the last buy and last sell. It's going to show your entry, your stop loss, TP1 and TP2, okay? And the way that these are displayed, excuse me, are going to be different depending on which platform. You know, they all look a little bit differently, but I did show you examples of what those, what the actual indicator looks like. What computer is best to trade with? I have Google Chrome, and Thinkorswim doesn't work with that platform. I'm using Chrome right now. It's only browser that I use. I think you may be referring to Windows or something, but I am on a Windows PC right now with Chrome. The browser should not matter because the platform is running actually on your desktop, Thinkorswim that is. So I'm not sure what you mean. Chromebook, really? Okay, I did not know that. I didn't know that Thinkorswim did not work on a Chromebook. That's pretty unfortunate. Have you checked with TOS? I don't know about the other platforms either. I don't use a Chromebook. TradingView is a really great platform, very nice, clean. I use TradingView all day, every day. Love the app. I'm guilty of using it on my phone, guilty of being in my TradingView app a lot, sitting on the couch or even in bed looking at charts. But I use Thinkorswim primarily. You can install on all of these if you wish. I don't think that would be necessary. That's going to be a little bit overwhelming. I mean, I have accounts with all of these outfits here. Thinkorswim is my main platform for charting and equity option execution. I do have TradeStation account, don't use it. I have a NinjaTrader 8 account. I'm using it for back testing and things like that. TradingView, like I said, I use it all day, every day. And MT4, I use some as well for the FX markets, but I do most of that through TradingView. So let me get back to today's charts. Let me catch up with the scanner. You've got the scanners. How do you get some tech support? Email support@seasonalswingtrader.com. My guy will be happy to help you on the tech side of things. His name is Mike, really great guy, intelligent guy. He'll hook you up. He can even do a remote session, log into your computer and get you all set up. I don't see where the options come into play to use the 1, 2, 3. Well, we'll take a look. I'll come back to that. So the question is, or the statement is, I don't see where the options come into play to use this 1, 2, 3 setup. All right, so hold that. So here, I just want to show you a couple, the handful of markets that I like to trade and follow during the day. Pretty much the most liquid ones that everybody is familiar with. 30-year bond, S&P, you can see here tagging TP1 to the tick. This is a 200-day moving average that is very important to me. You don't have to put that onto your chart. Let's look at crude oil. Let's see, we had EIA 930 Central. So it's typically stay out of that, but you had a trade that looks like it went from around 40 down to 20, so about a 20-cent, $200 trade there before EIA. We had a bigger, broader based move here after that report, right under the 200. Look at that, went right to the TP1 and then reversed, and then we got another long here with those averages kind of spread out. The euro and the yen as well, other good markets during the day. And there's some criteria that I do follow, and it's all kind of in the membership area, the what's and whys. So we had a trade that fired off late European session in the euro. This is the 10-minute. If we look at the Japanese yen, let's look at the old Japanese yen. So we didn't have anything today. We had a bigger one forming, but it never triggered. Had a trade there in the European session. Let's go back and see if we can identify. Again, this is 10 minutes. So if you want more activity, go down to a 5 minute, go down to a 1 minute, go down to a tick chart, you'll get a lot more, okay? Yeah, so going back to crude oil, again, you know, I did mention the tick charts are working extremely well. If you want more activity and you like to scalp, let's go to the 233. You experiment. I've got some students do it using 610 to I think 984 or something weird. Let's see, this was at late in this day. Let's just go back. You kind of see all these setups, and these do not repaint. So you can, you know, once you load this onto your charting platform, you'll see exactly what I'm seeing. So lots of nice, clean setups here. You know, more than plenty. These I don't trade. I don't trade these with the wide MAs spread apart like that. Here is one where the MAs are not spread apart. In fact, they're crossed. We get a close above. This is a good trade, knowing that we need to be cautious right around the 200-day moving average, but it does go through. So that trade right there is a move from 30 up to about 42. That's 12 cents or $120. Here again, look at the trend. See the MAs, the short-term MAs, very wide. We can't even maintain a close on the tick chart. Can't even maintain a close above the number 2 point. That's not a good trade. Here we have some divergence. Average is starting to cross. That is a good trade. Let's go back a little bit further. See if we have what we have. Here's another trade. MAs have crossed. I like that trade for a move up to 40, up to 50. Another little 10-cent trade there. Here's one where we're starting to cross. We close below. We get a retest up here at 58 down to 47. So a bunch of little 10-cent moves there for $100 a piece. It's pretty slick. So let's go. Yeah. So the question was about using options. And how do you use the indicator to trade options? Well, when we get a setup, this is not a very good setup because we basically on the bar that we closed below this number 2 point right here, it basically met TP1 on the same bar. So we're obviously not going to trade that. Let me see if I can find another example here. Let's go to Apple. All right, so here's a perfect one on Apple. We get this setup. Where are we? Right here. So we get this setup back in February. A nice 1, 2, 3 top. Averages of cross. We're getting closes at 129.75. That's where we're looking to get short. So how do we use it to trade options? Well, we can buy put options and look for targets here. We can buy put debit spreads, or we can sell bear call spreads. That's what I'm doing. I like to sell out of the money bear call spreads. That way, even if we don't come all the way down here, we're trading, you know, around this area like this, we can sell bear call spreads and we don't have to be as right. Does that help, or does that make any sense? Can I go over the lines one more time? Sure. So when we get a break below the number 2, which we can, this bar took out this low. So this low was 130.21. This low was 129.47. So since we took out that low, we get the chevron print and then our lines print, our risk, our entry levels, and our take profit levels. So this is kind of the breakout or entry level. This is your initial risk above the number 1 high. TP1, which is the distance between the high of the 1 measured to the low of the 2 measured down. And then TP2 is 2 times the distance of TP1. Oh, okay, Chromebook is not powerful enough. Gotcha. That makes sense. Does the scanner have to be loaded onto your computer? No, you do not need to have a scanner. A scanner is just an enhancement to help you find trades. Now, if you only follow 10 stocks or 15 futures markets or 5 futures markets or, you know, even 20, 30, 50 stocks, you may not need a scanner. A scanner is to be used as a tool to help you find setups based on the time frame that you wish to trade on. I.e., instead of scouring through 1,000 stocks every day or flipping through 20 futures markets every 10 minutes, that's just using the scanner, using technology to find the trades for you. Does that make sense? Too many arrows? Okay, well, I'm sorry. It's just showing you the full print. That's the way it's built. Just showing you the full print of the 1, 2, 3. Small lines and large lines don't have any. They don't have anything to do with the quality of the trade. It's just going to show. It's depending on the length of the setup, the distance between the one and the trigger bar. Yeah. So you depending on. Yeah, you're welcome. Anytime. Thanks for joining, and we'll look forward to having you. The email is support@seasonalswingtrader.com. So you can set up alerts to get an email or SMS text based on your platform. I can't guarantee what all platforms do because I'm not sure, such as like TradeStation and NC8, but you can set up alerts when these trigger. I know through Thinkorswim because I get them on a daily basis. Could also do that on the other platforms. But I'm not sending out alerts specifically on this setup. I mean, as we've already talked about, there are thousands of markets and dozens of time frames, and I'm not going to send an alert on a 5-minute S&P setup. One, you may not even care, or it may not even be day trading. Two, the markets are moving too fast for that kind of stuff. In our Discord channel, we're posting charts and setups and things like that, and this is what it looks like. So here are some setups that we posted this week. Posted some setups here over the last couple of days in the futures market. Here's what the members area looks like. I see somebody asked about the members area. You can see all of your material, education. Here's your Thinkorswim download. This is your TradeStation V10, V95, NT8, TradingView, and MetaTrader 4. And then this is just a little video on the free seasonality widget in Thinkorswim if you choose to use it. Of course, you don't have to. So yeah, some of those that we looked at this week, Linear, LEN, looking for potential topping patterns here. We had 1, 2, 3, but we've started to take out these highs, so we get a new #1 count. JBL is one that's looking fairly decent here, fairly juicy. I don't know why it keeps going all the way back there, but let me go here. There we go. So here, these averages crossing, we're below, we traded below, we're giving a little retest. This is one I'll look to be selling out of the money bear call spreads. Let's see, a couple others that we were eyeballing. VEL on a daily. This one looks like we'll probably take out these #1 highs and we'll start the count over, but we shall see. EWW, Mexico ETF, looking decent here. We've got trend line. Oops, we've got trend line breaks. Let me connect that properly. So we have trend line breaks. We've got a 1, 2, 3. So we'd be looking. The short will be down here, and then we're getting a retest of that trend line break, and then we're also have a little bit of a head and shoulder. So that's all looking pretty decent. So what I would do here is okay, I've got a setup. I like it. I need a couple of things for confirmation. Then that's when I'd go to an option chain and see what makes sense. Does it make sense for me to be a buyer or a seller? Where and what strikes should I be purchasing or selling at? Yeah, QQQ. This is another one that we did, and actually spies as well. So we had this one's kind of starting to. It looks like it's starting to melt a little bit, but we'll see what happens. Yeah, I believe you can. The question is, can you make the chevron bigger? So here's that chevron. If we go to, this is where you can change all of your settings. These are just bare bones, minimum black and white basic settings because I want to see all setups and then determine if I want to take them or not. This is all explained in the members area what this means if you want to manipulate that. Let's see, level break. Here you go. You can change the width. You don't have to do a down wedge. You can do whatever this other stuff is, down arrow. Change the color, something that maybe stands out a little bit more. Looks like that's what you're limited to there in Thinkorswim. Other platforms are a little bit different. So the purple one is a 200-day, and the shorter term are 5 and 21. Those help me with my timing of the entries. It's not a requirement by any means. It just helps me add a little bit of a filter. I show the members area again. Yep, here's the members area again. So you've got all these resources: day trading, swing trading, understanding indicator, customizing, setting up scans, a watch list, so on and so forth. The offer link is seasonalswingtrader.com/code. You can't click on that. I think I put the link in the chat. As far as I know, we're not having any issues because I see some folks have signed up. All right, gang. Yeah, we'll go ahead and wrap this up. I appreciate your time, and hopefully this was enjoyable. Hopefully you learned something. Maybe you didn't. If you didn't, let me know. Email us at support@seasonalswingtrader.com or email me at support@seasonalswingtrader.com. Personally answer you if you have any questions. My tech guy will be here, be back in the morning to help with any installation issues or tech related issues. I can't find my password, all that kind of stuff. That is out of my realm of expertise, but we're happy to help you at any time. Get unlimited support. Use us. We don't doesn't expire. So we look forward to working with you, having a relationship with you for a long time. Have a great rest of your day wherever you are in the world. Take care. Stay safe out there in the markets and in your health. And we'll see you on the flip side.